Hello and welcome to StockSynops. I'm your host, bringing you bite-sized lessons on the world of investing. In just 5 minutes, we'll break down key concepts to help you build your financial knowledge quickly and confidently. Whether you're a complete beginner or just need a refresher, we've got you covered. Today, in our very first video of the beginner series, we're starting at square one. What is investing? The basics for beginners. Let's jump right in. First things first, what's the difference between saving and investing? Saving is putting money aside in a safe place, like a bank savings account, where it's protected and easy to access. You earn a little interest. Right now, high-yield savings accounts might offer around 4 to 5% in a good year. But the main goal is preserving your money for short-term needs. Things like an emergency fund, a vacation, or a big purchase coming up soon. It's low risk, but the growth is limited, especially when inflation is running at about 2.7% annually, as we've seen recently. Over time, your savings might not keep up with rising prices. Investing, on the other hand, is putting your money to work to potentially grow it faster over the long term. You're buying assets, things like stocks, bonds, or funds, with the expectation that they'll increase in value or generate income, like dividends. The trade-off? There's more risk. Your money isn't guaranteed to grow, and it can even go down in value short-term. But historically, the stock market has delivered average annual returns of around 7 to 10% after inflation over long periods, way better than most savings accounts. Why do people invest? Simple: to build wealth and reach bigger goals. Think retirement, buying a home, funding education for kids, or just having financial freedom later in life. Money in a savings account might sit there safely, but investing lets your money grow through compound growth, through dividends, or through rising asset values. Here's a quick everyday example. Imagine you have $1,000 extra after building an emergency fund. If you save it in a basic account, earning 1 to 2%, in 10 years it might grow to about $1,200. But if you invest it wisely, say in a broad stock market fund, and earn an average 7 to 8% annually, that same $1,000 could grow to around $2,000 or more in the same time. And here's a teaser for what's coming. That growth gets even more powerful with compound interest, where your earnings start earning earnings too. For example, invest $1,000 at 7% compounded annually, and in 30 years, it could grow to over $7,000 without adding another penny. Again, we'll dive deep into that magic in a later video. Of course, investing isn't gambling. Smart investing is about education, patience, and strategy. Things we'll cover step by step in this series. You don't need to be rich to start. Many people begin with small amounts through beginner-friendly apps. Let's explore a few popular ones that are great for newcomers in 2026. Fidelity, often rated as the best overall for beginners, with excellent education resources, no commissions on trades, and easy tools to start small. Robinhood, super simple and mobile, first, commission-free stocks and fractional shares, so you can invest with just a few dollars. Great if you want something fun and straightforward. Charles Schwab, fantastic for low-cost options, including fractional shares and strong customer support. Ideal if you like a trusted name with lots of free research. Acorns, perfect for hands-off beginners. It rounds up your everyday purchases and invests the change automatically. A super easy way to start without thinking about it. And Webull, good if you want paper trading, meaning practice investing with fake money first to learn without real risk. These apps make starting accessible, often with no minimums, free trades, and built-in learning tools. Just remember, research each one, and start small to match your comfort level. So, investing is using your money to make more money over time, by owning pieces of businesses or lending to them, all while understanding and managing the risks. To wrap up today's basics, saving is for safety and short-term goals. Keep your emergency fund there. Investing is for long-term growth, to beat inflation and build wealth. Start with clear goals, like retirement or a house, and always invest only what you can afford to leave growing for years. The best time to start? Today. Even small steps add up. Please remember, this video is for educational purposes only and does not constitute financial advice. Investing involves risks, including the potential loss of principal. Always do your own research or consult a qualified financial advisor before making any investment decisions. Past performance is not indicative of future results. If this helped you understand the investing basics, give it a like, subscribe for the full beginner series, and drop a comment. What's your number one financial goal right now? See you in the next video on understanding financial markets. Thanks for watching StockSynops.